So that's like 1,200 crores of transactions per day. So that is the value of transactions we do. So you can understand that the customer has taken up this ecosystem quite well. From a merchant point of view also, it becomes a key differentiator because a merchant has invested in the infrastructure. He's sitting there in the branch. There is enough footfall which is coming to his merchant shop. With every transaction, he makes some money. So it becomes an added product. It also uplifts his status as a banker. So
Hmm.
like if somebody goes and opens an account, we pay a small fee to the merchant. So it additional income for him. And some merchants earn 5 to 10,000 rupees a month. So that's a large sum of income. Apart from that, they get upgraded. So the merchant is able to use the same infrastructure. For us, it becomes part of our business model. We don't need to have a very high fixed cost and a fixed capex kind of a model. With a very small fees, we are able to enable the merchant. And because there is no fixed cost which we pay to the merchant, through every transaction, he gets some money. So the model becomes much leaner and much scalable. So the differentiator is the business model in which we have built the entire Fino ecosystem and the way we are able to scale. That's why a 7, 8 year old bank has such a large network of customers and merchants. It was only possible because the way we constructed the entire business model and we put the customer at the center. Customer for us is both the merchant and the ultimate customer because the merchant itself is also my customer.
Sure.
End of the day, we have to realize that every merchant has multiple choices. For him, while Fino is there, there are other options also available to him. So long I'm able to give him the best of the product, services, technology, he's able to continue to cater to Fino. So the differentiator is the way that we have created the entire Fino model because in a payments bank where you cannot lend, the model itself becomes very difficult to sustain. And
Sure.
payments is largely people feel it is free. So like UPI is completely free. There is zero MDR,
Correct.
but there is a large cost which goes behind it. So to recover that cost and to also make some money, you have to build up a business model we can sustain over a period of time.
Right. No, thank you for that. I thought we should, segue into, thinking, your thinking, which went behind, the IPO, the lead up to the IPO. But before we get into that itself, I thought it might be interesting for us to know your journey from absolute startup, as you kept growing, and at some point in time when you decided what's the right time, to IPO. In fact, coincidentally, that's one of the questions that's popped up on our window. What's the right time for one, to start thinking about going IPO? And then, of course, your life would have changed. I think close to 4 years since your IPO, right? So
Mhm.
life would have changed. So if you could sort of walk us through the journey from absolute startup to when you started thinking about IPO, and post IPO, how life is different for the bank.
When we started as a technology company and we said that, okay, we'll try to work with all the MFI customers and provide them a technology solution. Over the period of time, we morphed into services company and we looked at financial inclusion as a bigger business for us. So one thing which is very important in any startup or you can't be fixated in your mind. You have to keep on evolving. You have to come changing. The dynamics will keep on changing. You will go with a particular business model when you launch your company, and the business model will change. So you have to continue to change. So changing ecosystem and changing with the ecosystem becomes very, very critical and very important. So that is one thing which we evolved in Fino in our 20 years of journey. I would say we must have evolved 4 to 5 times. And every time there is a crisis, it actually makes you much stronger and it uplifts you. The business model gets uplifted. And as a team, also, you get uplifted. And we had multiple challenges, starting from the Lehman crisis in 2007 8, then the MFI crisis, then the COVID, demand, and then the payments bank, the entire business moving to digital. So, multiple crises has happened over the period of time. So when we started, we were a services technology. We moved into a services company, and we were pretty much there for the first 10 years of our journey. If I look at till from 2006 to 2016, the first 10 years we were as a business correspondent for large banks in the country. Whether you look at the public sector banks or a private sector banks, we were largely working for them. That is the time we realized that our model is getting constrained and we are not able to grow and grow freely. Our hands were tied because whether it was a product or the choice of geography or the customer or the pricing, everything was controlled by the principal, and the principal used to be the banks. And that time, RBI came out with a differentiated bank license, which talked about payments bank and small finance bank, because we were BCs. BCs were allowed to bid for payments bank, and we were the only BC which got a payments bank license way back in 2015, and 2017 is when we started. So we freed our entire model by becoming a payments bank. Into the payments bank journey, we had a lot of openness in the first few years. We started to grow, and we started to grow very rapidly. And that is the time when we started to see a sustainable flow of income. So coming to your second part of your question, when do a company decide to go for an IPO? I think it's I couple of things to my mind. I think the business model maturity is very important. If you are able to predict at least the next 8 to 10 to 12 quarters of sustainable business coming your way, and you can predict that, okay, this is how the trajectory is going to happen. That is when, because in any IPO, one thing which is very important is people look at consistency. And if the consistency is missing, then it can really hamper your stock prices. So consistency, the fact that if you are one quarter goes very up, then the other quarter goes down, and then this kind of seesaw which is happening makes investors very jittery. So any company which goes into an IPO has to first look at whether their business model has matured enough so that they can predict whether they are ready for an IPO or not by looking at the next 2 3 years of journey. That is from a business model point of view. Secondly, I think the governance and the ecosystem of your company, and I would say the governance part, whether the governance of the board, the audit committee, the board members, the entire compliances with the regulatory authorities, for us being a bank, it was a natural thing for us. So we were always very compliant and governed well. We and Fino started having board meetings and audit committee meetings, NRCs, from the first year. Not even when we became a bank and we went for an IPO. We always followed a very structured board ecosystem. So we say we are a professionally managed company. So it's not a promoter, or it's only not a promoter driven company. It's a professionally driven company where likes of Sandeep Bakshi, Nachiket Moore, Rajiv Sabharwal, a lot of those people have been on the board of in the first 10 years of our journey. Post that, we had a lot of other people who have held positions as board members in the bank. Like we have Mr. Chauhan, who used to be there in the initial 5 years. Now we have Rajat, who is an IMA, IIT Delhi alumni. So getting the board structure is very important. I think two things to my mind. And the third is the readiness of the team to take up that extra stress.
Hmm.
Uh, because when you are a closely held company, there are only few investors who are there. It's very easy to for them and you to talk and understand each other. They would spend more time in understanding your business model, and they will understand what goes in, goes out for you. But as an IPO listed company, you deal with public money, you deal with public, you add new regulators like SEBI gets added over and above, like in our case, RBI. So it becomes even more complicated and complex. And the ecosystem, as you would know, you would have seen, the regulatory ecosystem has evolved quite a bit in the last 5 7 years for
Yes.
multiple reasons, globally also, in India focus also. So you should, as a team, should have the right people, whether it's the secretarial department or the compliance department or the entire board governance structure. So
Hmm.
those 2 3 things, I would say, if you have that in place, obviously you have to make money. I think that for a startup, that model has changed in the last 5 years, that a loss-making startups will get a rich valuation. I think it is now more PE-driven kind of a ecosystem, that you have to have earnings and you have to make profit, or you have to have some visibility
Sure.
on which how you will make money. So those are 3 4 things which come to my mind. I'm sure there are many other things which are there, but those are the top 3 things which I would say for a startup ecosystem, for
Uh,
a IPO company to
sure.
go actually.
I know this is very insightful. And how has life changed for your bank post IPO?
That's a difficult one. But I think life completely changes. One is that you become part of the public ecosystem. So a lot of governance on SEBI part comes in, and the board also becomes, I would say, more regulated in a way. More monitoring happens. There is enough requirements from MCA and SEBI which the board has to fulfill. And in discharge of their duty, there is a larger oversight of the board on the management and the company, which is very important, and as it is as per the regulation. So that is one part. Secondly, there is a public discourse or a public engagement becomes very large with the analyst community. You have to do quarterly analyst meet. You keep on meeting analysts. So I would say before we became public, uh, I was meeting largely private investors, and it used to be one or two meetings in a month. With public, I would say 20% of my time goes into meeting analysts, investors, existing investors, public investors. And then the people are also quite active on the social media, their they write a lot of emails. The AGMs become more active. You have more public retail investors coming to your AGMs. So the maturity level of the team also has to go through. And you have to be very clear in your communication when it comes to your earnings and disclosure of requirements, information. The flip side of it is that in an environment where we are the only guys in our business who are listed, so a lot of our information goes to competition, and they
Right.
benefit from that, whereas we don't get any benefit of their information, which is in private domain. So a lot of that thing also happens. But I would say it is baptism by fire in a way. So the initial years are obviously more difficult. You are also maturing. You are also questioning some of those things which you do as a listed company compared to what you were doing in private space. So a lot of actions is there, and stress is definitely much more in a listed environment, because anything and everything, whether it is in your control or outside your control, affects your stock. So if it's a private company and you are not going for a fundraise, there is no way your valuations are going to change. But here, every day there is a valuation change. And while everybody says that as CEO, as management, you should stay focused on your business and you should continue to perform. Don't look at the stock market. That's not your job. Stock market behaves the way it behaves. But it is easier said than done. You
Sure.
end up eventually looking at it every day and many times in the day. So obviously, but one thing which is important in a listed environment, you have to continue to focus on your business and do what is right for the business. So if you start making decisions looking at your quarterly performances or what the analyst and otherwise you feel may not be good, but market wants it, I think that can derail you from a long-term perspective. May not give you some short-term gains and benefit with some
Sure.
investors, but from a long-term point of view, I think makes a lot of sense to continue to focus on what you want to build. So as CEOs, as companies, we are builders. So we have to continue to build company like I think I shared this with you, that we consider ourselves a DMart of
Absolutely.
banking. So that's a customer segment. That's how we maintain our cost structure. That is how we price our products also. So from a DMart of banking, and you can understand DMart also has a lot of this quick commerce, everybody coming in and picking up their share. But I'm sure as that company, they are continue to focus on what is their long-term objective and continue to do what they think is good for in the long term. So as a company, you have to continue to focus on what you think is good for in the long term. May not give you good, maybe 1 or 2 quarters, you may have tough quarters, but
Mhm.
so long you are on your path, I think the market values it over a period of time.
Perfect. And I'm picking up a few questions from our audience. Now, I think you may have partly answered this when you say that you need to continue, focusing on your core. So the first question is, how can companies maintain agility and innovation post IPO when processes become more rigid? Because, suddenly, you are not what you were yesterday.
So I think it's a very genuine and a very right question in a way. See, agility and innovation is all also depends upon the see market looks at the bottom line. And market looks at the fact that how much revenue growth is happening, how much bottom line growth is happening, or how much investment you are doing for the long term, even if it means that there is a drop in your quarterly numbers and everything else. So processes definitely slows you down because for everything and anything you have to go by as per the SEBI LODR requirements per se. But it also depends upon how good teams you have. So if you have a good team and you plan yourself well, I think you can take care of the process part as far as that is concerned. And obviously, if you have to spend some kind of a money and there is a requirement that this has to go through multiple levels of approval, you'll have to follow that, but you have to plan accordingly. I think agility and innovation, I don't think so affects from an IPO point of view. I think the one thing which is important, which comes in that as the company becomes bigger and there are multiple stakeholders and there are multiple decision makers, and if you have a compliance or a risk guy in the company and they have a particular point of view, and then you say, no, I will not hear your point of view because it will affect my innovative approach or it will affect the agility of a company, then you are not doing the proper job because you have those guys, you have those departments, and they have to give their inputs and you have to value those inputs. But at some time, a balancing has to also happen that you don't lose out your agility, you don't lose out your innovation, but you also meet the process and everything else. I think it's a balancing act which is required to some extent. It cannot be 0-1. You can't leave the process and only focus on that,
Correct.
or vice versa. You'll have to balance it out, and somewhere you will have to intervene. You'll have to become an arbitrator when you really think it should be done, but it's getting stuck. So it happens in my company many times, being a bank also, but we have to sort it out.
Absolutely. And I think for a lot of people, on this session who are logged in, who are probably thinking of doing an IPO, I think, again, that balancing act is what is very tricky, right? Because there's so many gray
And
areas.
for every company, it will be different because we are multi-regulated company compared to some of the large ecosystem which are not in financial services. They are only regulated by SEBI.
Right.
But you can say it helps us also because we were regulated before SEBI, so we were prepared for it.
Certainly. Another question that I have is, what role does storytelling play in convincing investors and the market during an IPO journey?
See, storytelling is only good till the story is good. And if the story is not good, 1 or 2 quarters, 1 year down the line, 2 years down the line, the investors will see through you. So my belief is that whatever story it is, it has to be genuine, it has to be true. Then the second part is the art of storytelling. I think first is the story. Story itself has to be genuine, and the story has to resonate with the investors, and it has to come from the heart. If it is not coming from the heart and you don't believe in it, then investors, they are very smart guys, bunch of smart guys. They see thousands of companies in a year, so they can see through you and they will be able to make out just how much of it can come true, how much of it will have a challenge. So I'll give you one example. In my own, when we were going public 4 5 years 4 years back, and there was a one big question which was there, that will the entire larger masses move into digital thing, because UPI had just started and it was growing, doubling every year. But the larger population was not still part of UPI,
Sure.
and everything was being done by the top 100 million population of the country. Now, UPI caters to somewhere around 400 million people of the country as such. So, at that point of time, those that questions repeatedly came, and my view at that point of time was the fact that this is largely at a top end of the customer segment. For people down below, it will take a sizable time for them to become maybe digitally active or digitally native. But I admit that I was partly wrong on that, because my impression was that it may happen, but it will take a longer time.
Hmm.
But the way I saw that happened in the last couple of years, and nearly 40% of our own customers who are larger masses are now using UPI services.
Mhm.
So the usage and the fact that people took up to UPI much faster was never I could conceive 4 5 years back. So, but I had that belief it will not happen. So long it's just some of the stories may not come out to be true, but you have to be convinced that what you are telling is what you believe in. If you believe in something else, but you are telling something else, I think that is something which no investor would like. You're, it's like today we hear quick commerce will grow to some billions of dollars and everything else. So people are believing in that story that this will happen. But tomorrow it may not happen. It is fine. But the belief was there at that point of time when the story was being carved out. Like look at your normal Amazon and Flipkarts of the world. Nobody could say 3 years back, if you would ask those guys, will quick commerce eat into their business? Or will we order everything through e-commerce or through quick commerce? Nobody would say that. But now it has evolved and it is becoming so. What you tell at that point of time, you have to believe in that. But art of storytelling is only good till the time you have a belief in it and you feel it is true at that point of time. It may not come out to be true. That is fine. People acknowledge that because the ecosystem changes very fast and it is not in your control. Today, if somebody look at the geopolitical crisis which all of us are going through, if somebody would have asked somebody 1 year back, how would you see the textile industry in the country vis-a-vis all the exports you see, it at that point somebody would have made some projections and some story would have been there. But today it will not hold good. So that is what I wanted to say, that you have to believe in the story. Obviously, the art of storytelling is super critical, and that's where you get the interest of the investor.
Absolutely. Very, very insightful. You touched upon, your board of directors and the people who were there with you during your journey earlier and now. And here's a question related to that. How important is having an independent board of directors before going public? And I think the question is a little deeper than that, including the quality of people and so on and so forth.
Absolutely. So I had said that in my opening thing also. See, governance is very important, and having true independent directors are also independent. They may be bracketed under independent, may not be that independent. So one has to see that part. But from a true independence, I think independent director plays a very vital role. They play two vital roles apart from the fact they do the entire regulatory requirements and what is expected of them. I think they do a balancing act between the investors who are there on the board or the nominee directors and the management, and they guide the management and the investors, which is good from a long term point of view of the company. And sometimes it may so happen that the management or the investor nominees may be at crossroads with the nominee, with the independent directors. But independent directors, I think, plays a very important role, not only at the time when you go for an IPO, but post the IPO also,
Sure.
because that is the strength which the investor community sees. That if you have, like in our case, we have 8 board members, 5 of them are independent directors, and they come from illustrious backgrounds and careers, and they are all professionals who have lived with 25, 30 years plus experience. So that adds a lot of value to the board. So from that point of view, I think getting independent directors obviously is important, but also getting good independent directors who are truly independent
Sure.
makes it easier for investors and for you to also explain to the investors.
Good. Thank you. The next question is a little bit about you and perhaps puts you on the mat. It's what are the key traits of a founding team that can carry an idea to IPO level? And since you've been there from day one, this is a little bit about you as well.
See, I think couple of things which I would say from my own experience is that you need to love what you are doing. So people have to buy into your vision. The team has to buy into your vision. The investors have to buy into your vision. And you, as a leader, you have to be very clear in your vision and you have to articulate it quite well. So I think from my point of view, our vision has always been very clear in terms of we are serving the larger masses of the people so that we can uplift their lives over a longer period of time. So just imagine if somebody is able to save money and able to use it during crisis, it helps them or is able to get loan because now we have a transaction data of that customer. So I think the broad vision part is very important. I think then the loyalty towards the company
Mm.
and the fact that people believe and have been there for many years. Most of my senior team has been there for more than 5 year plus in the company. So that continuity of the team becomes very important because see once you are listed and then announcements come that your head of this business is gone or head of this business is gone or some compliance guys have gone. It market doesn't take that very easily because they feel that there is something which is some undercurrent, which is that he may have gone for whatever reason, but the general belief is there that there must be something. That's why the team is churned. So you have to have a team which is with you and they believe in you and the leadership of the CEO. They believe in the fact that the business model which they are building is for the long term. They have the loyalty factor. Obviously, they have the right traits and the right business acumen to meet the objectives of the company in the longer period of time. I think those are few things which are important as such. I would say the softer aspects always more than the IQ, the EQ is very important. IQ you can still build by getting more people or getting some junior, some middle level staff. But at senior level, I think the EQ plays a very important role.
Uh, I think that's very pointed. And another question, which I think one part you had talked about in terms of predictability of your business for the next, 10 to 12 quarters before you go IPO. This question is a little more specific. What are the non-negotiables in building a strong brand before the IPO?
I think from a non-negotiable point of view, from a brand, if it's talking about the brand only or generally for a company to go an
They,
IPO.
they, they mean a company. I think it's a larger question on a strong brand slash strong company before the IPO.
So I think I partly answered that also when I talked about the business model, the sustainability, the belief in your company, the belief in the story which you are trying to say. You can see that vision. You also the fact that how much money you want to raise. Many companies go for an IPO IPO is the start of a journey. It's not the end of a journey. It's one of the milestone in your life. A lot of people confuse that if I'm an IPO, I have achieved everything in life. I think the life starts after an IPO and it becomes more complex and more demanding after an IPO. When we were doing an IPO, practically for 6 9 months, I was completely out. We used to start meetings at 7 in the morning for Japan till 10 p.m. in the night for the East Coast, for the West Coast. So, and in between, we had some 10 12 meetings in a day, and that continued for 2 weeks. And in every meeting, we have to show the same enthusiasm, we don't know which investor will actually convert. So, and we were three of us. There were two more people along with me in those meetings. So that kind of toll it takes. So people have to be ready for that kind of a toll on you, and compromise of a lot of family time also happens during this 6 months process. You accounting things have to be in shape. So non-compromise, I think, is governance, the business model, your accounting systems, controls, mechanism, reporting, the financial reporting ecosystem, the good people on the governance, compliances, regulatory things have to be there. I think those are non-negotiable. Obviously, if you are a consumer brand and you are a D2C company or a B2C company, the brand image also captures quite a bit. We have seen a lot of companies who, during the IPO process, do a lot of advertisement and do a
Sure.
lot of visibility creation as such, which is also good. But I think in the long term, if you are a good brand, it shows up.
It shows up. Absolutely. And I thought that we should touch upon the consumer, right? Which we started off this discussion about. Uh, over the period of time that you started and reached here, how have you been seeing the consumer behavior changing with respect to banking, of course?
Consumer behavior is completely, I would say it has changed. As a one thing which I mentioned to you earlier was that from a physical network, they have moved to digital. So the consumer preference is becoming more digital. They want to also use UPI for all QR payments like everybody else. So like if you look at your own family or your own staff, they also do a lot of UPI and they want to be seen as if they also are able to do digital payments. And that's an aspirational India, ambitious India, which we call it. If you go back to the mobile phone days in 90s, middle of 90s, I think many people will not even, I don't know how old the people are there on this, but people used to flaunt their mobile phones and show them at that point of time. So today, I would say the consumer is also moving in a direction where he doesn't believe that my boss and me should be different. They
Mhm.
have the same level of information, communication. He may not be able to talk in English, but he's aware of everything what is happening in the ecosystem.
Right.
And he also wants to do the same way you do business. And he also wants to do the same. So that aspirational India is actually changing a lot of people. The younger population is born with mobile in their hand. So I have a niece who's 1 year old, and she does this on the mobile phone at one age, 1 year old. So she's already seen that there is this is gadget is there, and if you do this, the photographs moves around and some cartoon will come up or something like that. So they are born with mobile phone in their lap. So the consumer has moved from physical to digital. We as generations have moved from long form to SMS to WhatsApp to Insta. And even now, when we go to a branch, we can't wait for 1 hour. We want transaction to happen instantly. Even ATM sometimes feels, array, it takes a minute to do a cash withdrawal and there is five people waiting. We go to some other ATM. So people like in our business, if a customer comes to a merchant and he's busy with something, he moves out.
Hmm.
Customer, if he's ready to wait in a branch for say 15 minutes, he's not ready to wait for even few minutes in a merchant location. So everything has become very instant. I
Sure.
would say if I look at today, a 2 minute Maggie would also look very long. When a 2 minute Maggie came 20, 30 years back, it used to be very instant.
True.
Today, a 2 minute Maggie would look at is as if it's taking hell of a time.
Sure.
So to that, I would say the customer waiting time to do any business or any transaction is really as expectation has really come down. And I would say digital has played a very important part in it. Obviously, access to finance, convenience, everything bundled with it.
Rishi, we may have time for one last question. Um, how do investor expectations evolve from seed stage to pre-IPO rounds? This is the question that's coming from the audience.
Yeah, this is very important actually because when you are in the seed stage, you are telling a story. And then when you're coming to a stage A, B, C, round A, B, C, that story has to show something happened on the ground. So the investor conversation at first stage is largely the team and the vision of the team, what they want, what problem they want to solve. Is there a look-alike of that in India or globally, which is there, and have they been able to resolve that problem? How big that market is, how big that problem is, and how big that market is as such. Because if you are looking at a lab solution and you want to build up a company for a lab solution, it will not grow. It will at some point it will saturate. But if you are building a company which has a big problem and it looks at an enormous amount of people you can cater to, you can look at, that is where I think it's the seed stage conversation. I'm sure any investor would not be interested if he's only looking at a few lakh customers. Say like in India, if I say I want to do banking only for niche, Credit is still able to do that because Credit has built up that model for niche customers, but still they cater to a larger population of the people. But if I look at, say, I'm only going to look at, say, 1 lakh customer or 5 lakh customer, I don't see the investor interest coming because we have 140 crore people. But a 10 lakh, 20 lakh person may become maybe relevant for Norway or Sweden, but not for India.
Right.
So how big the problem is, I think is relevant from a seed stage, and how good the team is and how coherently they are working. At the later stage, I think it becomes how much you have been able to solve the problem, how scalable your solution is. Have you been able to? Can you become sustainable over a period of time?
Sure.
Does it make sense to put more money? Because sometimes putting good money after bad money doesn't make any sense. So they would look at how, and we have seen enough and more examples in our own startup ecosystem in the country where companies were good to a particular level, and when they've see, 0 to 1 is easy to scale because it is 1 to 10 is more difficult. 10 to 100 is where the entire metal comes in, metal of the team, model, and everything else. So somebody who's able to survive 20 years, 15, 20 years, and is looking at 100 years, I think that is where makes a lot of sense for an investor from a long-term perspective. But public investors are very short-term,
Mhm.
largely. They look at maybe 3 months to maybe 2 years period. Private investors look at 3 to 5, maybe 10 years also at times. Larger funds and institutional funds may look at that time kind of a time frame. But that is where in IPO quarter to quarter, the QSQT becomes super critical. And
Absolutely.
sometimes you have to make a choice for quarterly results. You compromise on the long term vision. I think that is something which companies should not look at.
Thank you, Rishi. And, I think what you've managed to do is to articulate so very well, the journey from startup to IPO, the challenges, the expectation from investors, and fundamentally, the approach that founders need to take, right? Thank you ever so much. And ladies and gentlemen, that was Rishi Gupta, MD and CEO of Fino Payments Bank, and as Rishi himself put it, the DMart of banking. Uh, Rishi, thank you so much on behalf of the CII Startup Subcommittee Western Region and the entire audience, who's on this call. Thanks again for your time. I hope you enjoyed it as much as we all did.
Absolutely. I look forward, and thank you, Ravi, and thank you, CIA, and thank you all the people who could hear me. These are a lot of this are my personal views, may not be. Let me put a disclaimer in the end. These are a lot of them, maybe my personal views, not of the company view or anything for the public. But yeah, it was a good conversation, and thanks, Ravi, for giving me this opportunity as well. And
Absolutely.
thank Nenand. He is the guy who connected us.
Absolutely. Thanks again and have a good day, everyone.
Thank you.